Hey everybody, Chris Englebert with Englebert Financial Advisers. Guess what? It is the first of the month and the first of the new year. Happy New Year to everybody. This is our first of the month update, January 2024. And the big question is that we got a real healthy Santa Claus rally in December, which kind of saved a lot of people's investments portfolios. The question is, ringing in the new year in January, are the markets, the equity markets especially, going to continue on the strong run that they experienced in November and December? So let's take a look here. You can see that the S&P 500 literally bottomed on October 31st. If you've been watching our monthly updates, beginning in July, our risk indicators were elevated. We were playing more defense. And we talked to you in October that we thought that we would obviously end at a 3-month decline. We did August, September, October, and then November and December, the markets took off. Actually, much stronger than we expected. This was due quite a bit to the fact that interest rates eased, which we'll show you in our next chart. But let's talk a little bit about returns in 2023. They were driven again by, I don't know if you want to call them the FANG stocks, the Magnificent Seven, whatever the case may be. Large cap tech won the year. And you can see I'm using two different ETFs here. I'm using the VUG, which is the Vanguard Growth ETF. And last year that was up over 45%. You can see the VTV is the Vanguard Value ETF. It was up 6.27%. So people, depending upon your risk profile, experienced quite a difference in return. If you're an aggressive investor, obviously you did extremely well. Conservative investors did okay, but don't let the media trap you into saying, wow, if you didn't make 25%, you didn't do well last year. Everybody did well last year, and everybody made money, which is a good thing. But let's talk about the bond market. It's a little freaky here. The bond market ended December 31st of 2022 at 3.88%. It went all over the board last year, getting as low as 3.4% to as high as almost 5% on the 10-year Treasury, as everybody was worried about a reignition of inflation and the Fed continued to crank interest rates up. The Fed then began to talk a little bit nicer about interest rates, that the fact that they were done. And sure enough, we saw yields drop dramatically from 5% to under 4%. And guess what? The 10-year Treasury ended at 3.86%. Almost where it began the year, with a lot of volatility in between. What does this mean for bond investors? Well, it turns out that bonds finally had a positive year last year. If you look at the coupon, many bond funds return anywhere from 2% to as much as 8%, depending upon what type of bond you're in. That was good news for bond investors because they had 2 years back-to-back, and 2022 was an extremely harsh year for bond investors. So what do we think is going to happen going forward? Well, let's talk about Wall Street forecasts. Every year, the major investment firms come out with their forecast for the year, and they say, here's where the S&P 500 is going to end December 31st, 2024. Now, if you look at this chart, you're going to see that the most bullish firm out there is Yardeni Research, which is saying that the S&P is going to end the year at 5,400, which would be a 13% higher return from where we are right now, the first week in January 2024. The most bearish is JP Morgan at 4,200, which is almost 12% lower than where we are. So you're seeing quite a spread. But one of the things that we're trying to tell our clients coming into this year is that we think some of the returns in the stock market for 2024 were actually backfilled in December of 2023. We think the market's gotten ahead of itself, and you're going to hear me continuously talk this year about 555, not 666, but 555. What do I mean by that? I believe this year you're going to see stocks do 5%. Bonds do 5%, and probably commodities do 5%. Well, lo and behold, right now, money market funds are paying 5% as well. So there's going to have to either be some resetting of equity prices with lower interest rates ahead, or something's going to have to change in order to get some double-digit returns this year, depending upon which asset class you're investing in. So let's sum it all up. S&P 500, the NASDAQ finished 2023 with strong gains. But remember, in 2022, we saw big losses in the S&P 500 and the NASDAQ. The yield on a 10-year Treasury finished just about where it started. Now, interestingly enough, I'm recording this video the first week in January, and we got the December payroll numbers in, and the payroll numbers were unexpectedly high. We are seeing interest rates back up over 4%. I would not be surprised, just like I think the stock market's gotten ahead of itself, would not be surprised if interest rates float back higher, maybe 4.25%, 4.5%, because they did go from 5% to under 4% literally in 2 months. We've seen some moves in November and December in both the bond market and stock markets that I've never seen before. Now, having said that, our risk indicators at the end of December were extremely elevated. We began to raise some cash. And again, when I talk to you about the fact that our risk indicators with regards to the equity markets are elevated, I don't mean sell everything and we're going to have a 30% decline, but I mean what we do for our clients is we adjust the dials and we start to dial back, take some profits, hold some cash. Not a bad thing to hold some cash on the sidelines right now, because guess what? Cash is paying 5%. And I do believe that this year you will be given some opportunities, because one of my previous videos, I talked about episodic volatility as our other phrase for 2024. And what we mean by that is we've got an election in 2024. We still have 2 wars going on, and that there may be a situation where in a short period of time, the equity markets have a sharp drawdown. If you have some cash, you can put your shopping list together and you buy your favorite names. So again, we are happy to be in the new year in 2024. We hope everybody had a great Christmas and New Year's vacation. We're back to work, and stay tuned for our future videos. We'll be talking to you about some upcoming exciting things happening in the near future.